So we're just at noon here on Mountain Time. I think people will continue to trickle in, but we can get some housekeeping out of the way. So hi, everyone. Thank you so much for dialing in today. And thanks to our talented lineup of panelists for sharing your collective wisdom with us. For those of you who don't know me, my name is Ala Rubenstein. I'm the Investor Relations Director with BXE Capital. And I also oversee the compliance here. And I will be your moderator today. So I'm really proud to know each and every one of these panelists here, because aside from their roles that you see here up on the screen, they are also each partners of BXE Capital, Colorado's first digital asset investment fund, and compose a pretty talented, multifaceted team who each bring their own unique perspective to the cryptocurrency space. We have Joshua Finkleman, Matt Kaufman, and Josh Sroge today, who will each be introducing themselves in just a bit. And we also have, it looks like, pretty broad spectrum of attendees here tuned in. Some of you might already be pretty familiar with blockchain and cryptocurrency, and some of you are now recognizing the potential of this new industry and probably looking to dip your toe. So we're very excited to have all of you on. And again, like I said, before we get started and turn it over to our panelists, just want to get some housekeeping out of the way. So this panel discussion is being recorded. And if for some reason you need to drop off of the call or you have someone who was unable to attend, we're more than happy to share this recording afterwards. Each of your microphones has been muted for the duration of this webinar. If you have a question that you'd like to ask the panelists, there's a Q&A box where you can type in your questions. We recommend using the Q&A box as opposed to the chat, especially if you'd like to ask a question anonymously. And then the full webinar will run approximately 1 hour with plenty of time for questions as they come in. And so to kick off our conversation, this is for each of the panelists to introduce themselves. Can each of you please give a quick overview on what got you into the industry initially and how that led you to your current role within the blockchain industry? Perhaps we can start with you, Josh Sroge.
Sure, thanks so much, Ala. And I want to follow up on that intro to say how great it is to work with both you and Josh and Matt. And I feel fortunate for that, as well as to be in this industry. I mean, it's an incredibly exciting time to be in this space. It's one of those rare spaces that I feel is, special. And I think a lot of people say that about their industries, but this one really is. It's emerging, it's exciting. There's a lot of interest in the space. It's unique and new and potentially highly disruptive across a variety of industries, not just finance, but many others that are involved in settlement or transactional in nature, or even storage. There's so many use cases. But about me, I first got into the industry in 2016. I run a fractional CFO firm here in Denver, and a client in 2016 who was doing cross-border transactions using Bitcoin as the method to move money faster across borders with lower costs to the individuals. So that was the first exposure. I mean, I'd read about it previously, like many folks, but hadn't really gotten the exposure. And then 17, Axis Venture Partners had invested in Shapeshift, which is a crypto-to-crypto digital asset exchange with a variety of pairs, as they're called. So Bitcoin to ETH, or ETH to Litecoin, and so on, as opposed to USD pairing, where you perhaps send your cash onto a platform from your bank account to buy these digital assets. So I worked for them as their chief accounting officer in 17 through the rally cycle into 18, into late 18. And then, like many folks in this industry, took a little time off in 19 during the lull, did regular work. But I started talking to Binance, which came on the scene in 17 and quickly became one of the largest exchanges, or is the largest exchange globally by volume. They were looking at establishing an onshore presence in the US that would have fiat rails, by which I mean the ability for you to link your bank account and buy digital assets like Bitcoin, Ethereum, Litecoin, Dash, so on. and the talks continued for a while until January of 2020. I onboarded with them in an interim CFO capacity. I've been there for a year and helping them get their money transmission licensing, because they are an MSB, right? If you are, actually, let me take a step back for a moment and say, if you are going to establish a business that involves the movement of currency, of USD, you are an MSB, you are going to need to be licensed in states to operate. Exchanges exist so that you, and this is very elementary, but I don't know the level of everyone on the call, but an exchange exists so that you can use your fiat currency, your USD, or other currencies like euro, yen, to purchase these digital assets. In the early days, the only way to get Bitcoin, which was the only coin that existed in the very early days, was to either mine it, doing the computational work to support the network and getting the Bitcoin award, which has recently been halved. Or someone would send, who had mined it, would send it to you, or they'd been sent to them. Maybe you mowed their lawn, they paid you a few Bitcoin, or the famous pizza story of the 10,000 Bitcoin for Papa John's pizzas. But then the need for exchanges arose because people realized, hey, there's no way for regular folks who aren't tied into the community to access these assets. And there was a great demand for them through people who realized the future use case and where it could go. And so these exchanges arose to fill that need. Binance US, who I work for, is one of them. Exchanges are a rapidly evolving space. Will they resemble prime brokerages in the future? Will there be mergers of custody and broker-dealer and futures and custody, I mentioned custody, other elements under one umbrella, like you might see with, a Schwab or something? Is someone like Fidelity or Schwab going to acquire an exchange in the future? Is there going to be greater consolidation and it's going to resemble traditional financial products? We believe so. I think that's where the space is headed. There's also a lot of evolution in terms of what I work for, what's called a centralized exchange. We custody the customer's assets. It's a place to go for pairings. Maybe you want to exchange Bitcoin for Ethereum, or maybe you want to onboard your USD for Chainlink, for example, or Link, as I should really call it. A decentralized exchange, or DeFi, that's a new product space recently coming out, based on Ethereum, which is in a sense different than Bitcoin in the fact that it's a programmable kind of money using smart contracts. And I'm sort of glossing over it. But DeFi is both an opportunity and a threat to centralized exchanges, because there are tokens that work on those. And of course, we want to list them and have them available to our customers. But this new area will be one that we might not explore in depth on this call, but it's certainly one to keep an eye out for. And with that, back to Alla, or do I go direct to Matt Kaufman?
Well, thank you so much, Josh. Yeah, Matt, if you don't mind introducing yourself and tell us a bit more about what you're working on.
Yeah, thanks, Alla. So my name is Matt Kaufman. Currently, aside from being a partner with BXE, I'm also a partner with the law firm of Hathaway Kunz, based in Cheyenne, Wyoming. For the last 15 years or so, I've practiced predominantly corporate securities and sort of business formation, capital formation work. One of my primary duties is helping companies truly sort of navigate the capital formation stage when they're taking on investors and figuring out how to, in a compliant manner, do a private securities offering. And so that was really one of the things that brought me into this space. It was kind of serendipitous for me because a couple things were happening at the same time. One was that a number of years ago, the then governor of Wyoming, Matt Mead, formed a task force of about 20 people in Wyoming to basically come up with a business plan for the state of Wyoming to help diversify its economy. And I was fortunate to be appointed as the only attorney to that task force. And while that was happening, there was a group of folks, Caitlin Long among them, who started this movement in Wyoming to bring some attention to blockchain issues. And so as an outgrowth of those two entities, Governor Mead at the time formed what is now known as the Wyoming Blockchain Task Force, which is a combination of Wyoming legislators and then 3 lay people appointed by the governor. And so I was appointed along with Caitlin and one other person to that task force. And so with that happening at the same time as my practice, I started to see an incredible emergence in late 2015 and really in 2016 of my phone was just ringing off the hook in 2016 of people that wanted to conduct offerings and do offerings of tokenized projects. And so there was this incredible conversation happening of how do we offer these tokenized projects to investors in a security compliant way. And of course, with that back then, nobody was really using the nomenclature we have now of a security token or consumer token or utility token. And so we were kind of flying blind, honestly, and navigating through this. And it was, again, fortuitous. We were really taking a critical look at a lot of those projects and deeming them ourselves to be securities. In retrospect, 4 years later, it turns out we were right. The SEC agreed with us and deemed a whole lot of those projects as securities. But that was really how I cut my teeth on this industry, was kind of just, again, sort of on our own, wading through what exactly this technology was, how it worked, what these different token projects consisted of, and how you could, as we call it, sort of square peg round hole these token offerings with securities regulations. And so anyways, that overlay on top of what was happening in Wyoming and being appointed to the blockchain task force was then put directly in a seat to have an opportunity to not only be a voice, but help shape all of the legislation that Wyoming has passed. For those of you that don't know, Wyoming has been the most aggressive state in the US in terms of passing legislation to accommodate and create a regulatory structure for blockchain, different types of blockchain ventures, and as well as crypto ventures. And so we have a new governor now in Wyoming, Governor Gordon, who has reformed that task force again. So I was just reappointed by Governor Gordon, and so I still serve on the blockchain task force. So along with a few legislators in Kate Long, I'm actually the only one that's been there from the beginning. So I've had the fortunate opportunity to literally work on every single piece of legislation that Wyoming has passed in this space. And so for those of you that, again, may not know, one of the most groundbreaking things that Wyoming did was go back 4 or 5 years ago. It was very hard, and it still is to this day, very hard for a lot of crypto-centric companies to get meaningful bank access. And it's, no fault of the banks. A lot of times the banks' hands are tied with various regulatory restrictions that they have. And obviously the regulators are warming to this on a continual basis, but Wyoming sought to solve that problem by creating a new type of bank in Wyoming called an SPDI, a special purpose depository, which sort of, and I won't get into the details of it now, but it allows crypto companies to apply for what's akin to a fully reserve-backed bank, and offer crypto banking products and services to that community. And so again, I was fortunate to represent Kraken, which is a large exchange, in pursuing one of those SPDI licenses. It was the first one of its kind, first one in the country, first one in Wyoming. And so we completed that a few months back and are in the process of standing up that bank. And I will be, even though I can't talk about them publicly, I'm currently representing a whole lot of others that are in the process of pursuing these licenses as well. So it's been fun to kind of be part of this from, originally sort of the securities regulatory compliance piece, and now we're kind of transitioning into more of an open conversation with regulators in terms of figuring out how to stand these entities up and sort of participate in the legacy financial systems. So with that, I'll hand it over. Thanks, all.
Yeah, thanks, Matt, and congrats on your reappointment. Josh Finkleman?
Yeah, thanks, all. My name's Josh Sroge. I'm the co-founding and managing partner of BXE Capital. As all had mentioned, our team launched the first digital asset investment fund in the kind of summer of 2017. And so we've been, kind of methodically building out ever since, and spending a good bit of time educating folks on the merits of not only blockchain technology, but on having some exposure to this new asset class. And, before I started the fund, interestingly enough, I actually ran a credit card payments company. So I was, traditional card brand guy, and ran a traditional kind of credit card acquiring company. And in late 2013, a good friend of mine told me about Bitcoin. And, and I admittedly, so I was dismissive, but, he was super passionate about it. And so I decided to kind of do a deep dive. And I think given my payments background and my background in accounting and finance, I was able to really quickly connect the dots and see how blockchain technology, i.e. digital ledgers, can be leveraged to send value around the world much more efficiently than today's payment rails, right? Whether it be domestically or internationally. And so, much like we saw in the 90s with the dot-com era, and that protocol layer that was set up, that TCP/IP protocol layer, that enabled us to send data instantly through the internet. Well, much like that, blockchain technology enables us to send value through the internet, right? MOIP, money over internet. And it's really kind of the last missing piece in the protocol puzzle. We can put people, on the moon, and we can create electric cars, but we can't send value through the internet efficiently. And most of the payment rails that are set up today domestically, the card brands, or internationally with a SWIFT network, that technology is like 40, 50 years old. It's just way outdated. So what we're seeing is the emergence of the new technology to enable a whole host of a lot of different things. One of them is to send value around the world much more efficiently without trusted third-party intermediaries. And when you really kind of boil down this technology at its core, what is its value proposition, blockchain technology? Well, we're taking software, math, and cryptography, and we're leveraging it to remove people. Honestly, just to disintermediate trusted third-party intermediaries. Now, that could be in a whole host of different ways, right? That could be in payments, that could be in asset management, that could be in supply chain management, real estate title transactions, no offense, Matt, attorneys. You can create now smart contracts that are programmatically written and auto execute based off of external data feeds. So you don't need attorneys. So this technology is really going to eventually be as pervasive as the internet. But we're in the early days of this, right? Which is a super fortuitous time for all of you, because you have the ability to, those of us who didn't capture the value proposition, off of the internet in the 90s, you get a second shot, right? You get a shot at redemption now. You can capture the value proposition off of this tidal wave of innovation that is, candidly, it's on the tipping point of going mainstream. Right, we've seen recently Square now. You can buy Bitcoin on the Cash App. PayPal just rolled out last month. They're now rolling out the ability to use cryptocurrencies. Earlier this summer, the OCC, the Office of Controller of Currency, approved all federally chartered banks with the ability to custody cryptocurrencies. Huge. And now we're seeing the emergence of central bank digital currencies. So now central banks are working on essentially digitizing, the dollar, the yen, the pound, et cetera. And through this technology, we're going to see the emergence of and the transformation from physical currency, as we know it, to digital. Right. And right now, China is actually testing their central bank digital currency in a couple of different cities. So we're in just an exciting time, not only for our space, but really for the world, to embrace this technology. And we're going to see money upgrade. And with regard to asset management, it's our belief that we're going to see every currency, every equity, every bond, every commodity, and every derivative become digitized, because you can move these assets around, you can settle them much more efficiently, you can trade them, 24 hours a day, 7 days a week, 365 days a year. You can't do that with the stock market, right? To give you an example, last year, stocks, equities, traded a little over 1,600 hours last year versus cryptocurrencies traded over 7,700 hours last year. Because they trade across some 400, digital exchanges around the world that trade 24 hours a day, 7 days a week, 365 days a year. So you're seeing the emergence of a paradigm shift. But we're in the early days of this, right? So there's still a lot of infrastructure that needs to be built out, but it's our belief that we're going to see kind of a lot of adoption and retail and institutional adoption of this technology and of this asset class over the next few years. So I can talk forever, but I'm going to send it back to Ala so she can ask some more questions.
No, and I think, we can all feel your enthusiasm. There does seem to be a lot of momentum right now and a lot of things coming to the news. You had mentioned Fidelity, Schwab, Visa. There's all these really big names now innovating. So a question to the three of you, Josh Sroge had mentioned DeFi, Matt, these special purpose depositories. I think there's so many different directions we can go in, but perhaps each of you can touch on what is the biggest hot topic issue for your specific space that's causing massive disruption at this very moment. And whoever wants to take that.
Well, I guess I can go first. Being the one who's like in a heavily commercial space, right, facing retailers, right, we're a B2C model. There's what we call corporate customers, the market makers, and then there's the retail folks, which is like you and me, who would go on and just onboard our, as individuals to trade or just to buy outright. So being on that forefront there, there's several disruptive things. Some of them are what I call positive disruption, right? And I think Josh spoke to it and Matt as well. In terms of banking, and that's been one of these great impediments, especially in the early days, or even as recently as 17, 18, very difficult to establish banking relationships, difficult to maintain what we call the rails, the on and off, the things that happen in the background that most people don't see unless they're in fintech. So I think that's one of the positive things is this acceptance, embracing nature of banking as a vis-a-vis crypto, and that the regulators are helping to facilitate that. I think that's one of them. The other is back to DeFi is, what is the future 5 to 10 years out? It's all, you have this programmable money as a lot of folks like to refer to it. Do you need a centralized exchange for all exchanges of value? You probably don't. You could make use of what they call a decentralized exchange. It's actually typically not a place as it is a protocol that allows for there to be automated market makers that adjust pricing based on liquidity. And here I'm going to get into the techie geeky stuff, but basically it's a protocol to be able to exchange tokens, which have different use cases and different value propositions with someone else out there through code, right? That's automated as opposed to a hosted exchange or flea market, as it were. I think those are the key.
And maybe I'll jump in as well. I think there's a couple of different things that at least I'm seeing from my perspective. The one that's most exciting to me is there has been a rub, I think, since the invention of these digital assets with respect to how they interact with traditional regulatory and legal structures. They're used to not only carve out and determine what an individual or company's rights are with respect to those assets, but also how they interact with each other. And we have seen so much happen this year. It's been unbelievable. And obviously, I've been part of that with respect to Wyoming, but Wyoming's only one little tiny piece of this. There's federal regulatory overlay to this as well. But I'll give a couple of examples of the kinds of things that I'm thinking about and see. One example is the UCC, the Uniform Commercial Code. A lot of people aren't familiar with that, but the UCC covers all types of commercial transactions, whether it's lending transactions, collateral transactions, secured interest transactions of all kinds, and the UCC governs that. Banks, in many respects, are obligated to comply with UCC on a lot of their transactions. Well, how do you define the rights of two counterparties in a transaction when they're dealing with digital assets? and the tangibility and the functionality of that is not something that the law contemplates. And we've seen now in places like Wyoming a reaction to where now these legal structures can accommodate parties interacting both through legal transactions and regulatorily with regulating agencies. And so that to me is a huge indicator of the direction of things, because it brings legal certainty. I mean, that's one of the reasons that people want to do business all globally in the US to begin with, is they want the legal certainty that comes with our legal structures and the enforcement and the enforceability of those legal structures. So that's a huge enabler, I think, for this technology. Another area we're seeing this is in things like trusts and estates, and the ways, again, I'm on the forefront of what Wyoming is doing, but the way that existing legal and regulatory structures are being now accommodating to digital assets, to enable, again, people to transfer assets upon death, to plan for them, to uniquely hold title in these assets, and things like that. So I think the more we see these regulatory structures sort of, and again, these legacy regulatory structures, both at a state and a federal level, be accommodating to digital assets, that just paves the way for people to move into this space in new ways. And again, I don't want to belabor the point, but just all you have to do is look back at the last even 3 months at some of the news that has come out of the Securities Exchange Commission, the SEC, at the federal level with respect to not only their treatment and view of different token projects, how they're treating certain things like Bitcoin, Ethereum as not securities and defining it as something different. And all of this regulatory guidance just continues to build momentum so that people can navigate the space. And to me, that's just, it's hugely exciting because it paves the way for a lot of new activity.
Josh, Finkleman, did you want to add anything?
Yeah. Well, of course. So, there are so many just exciting things. I mean, I think, I'll just touch upon a couple that I'm really excited about. One is the digitization of money, right? I mean, we're now seeing, earlier this week, Visa just announced that they're partnering with USDC, which is a stable coin. It's a digital stable coin backed by kind of Circle and some other large investors. And so they are going to integrate that digital token into their payment rails. So now merchants and people can literally transact using a digital currency on the Visa, subnet system, which is unbelievable, right? And then we're seeing banks move into this space, and we're seeing super iconic investors like Andreessen Horowitz, Chamath Palihapitiya, Kathy Wood, Paul Tudor Jones, get behind kind of Bitcoin as this new digitally scarce commodity. They're kind of like gold 2.0 as an inflationary hedge. And it's just so, incredible to watch the transformation. I tell you, when I started investing, personally in 2014, I mean, I'd talk about Bitcoin and people look at me like I have 3 heads. I mean, they're like, you're insane. Fast forward, some 6 years later, and it's going mainstream. And finally, institutions and governments are realizing the enormity of this technology and what it's going to enable us to do as a species. And it's super exciting, and we're going to, much like we saw a massive transformation from the internet economy in the kind of late 90s, right? We're going to see a similar scenario unfold for this new digital economy over the next 5 to 10 years. And our lives are going to change, demonstrably, in how we conduct business and how we interact between people. And, you might not know, that it's blockchain technology on the back end of this, but guess what? All of a sudden you'll be able to move money internationally through your cell phone via a web browser, and it'll settle in seconds. And you won't have to pay $50 wire fee. You won't have to go down to your bank to send that money. right? So that's just one of 100 examples of what we're going to see. And this is the beginning of this. This is the early days, you know. And for those of you who are investing in this space, and I get this all the time, they say, hey, am I too late? That's nonsense. You know, to give you a sense, from our research, we can roughly ascertain that about 2% of the world's population has exposure to digital assets. 2%. So we're all super fortunate on this call now, you know, to recognize what this technology will do and still be an early adopter. And that's pretty incredible, right? That's kind of like, you know, it would be the equivalent of recognizing the value in the internet in the early 90s, right? Before everyone else kind of realized that. But I would suspect that, you know, the kind of the genie's out of the bottle, that people are going to start to really now rapidly understand what this technology can do. So, you know, I don't want to continue to you know, yeah, but those are just some of the things that I'm super excited about.
And I think this is a great segue, because since we're talking about central bank digital currencies and the banking, we did get a comment here on the Federal Reserve coin, and I guess we can just continue down this path about talking about CBDCs, which is the acronym for central bank digital currencies. And so the comment that we got was the Federal Reserve coin digital currency is actually going to kill the retail banks, or at the very least eliminate a majority of the current retail banks. And for those of you who joined in by phone and maybe can't see this chat going back and forth, Josh Sroge did offer a reply, but Josh, maybe Sroge, maybe you can elaborate on your response to this comment. Is a Federal Reserve digital currency going to replace the banking system as we know it today?
Yeah, this is a really interesting topic, and I also see there's a question already launched in the Q&A box that's similar, and they do all tie in together and to a lot of what we've been talking about, which is, you know, different countries are looking at CBDC strongly, but right now, and obviously things can change. There's a digital dollar project, and I've seen some of the working papers, and the idea is not so much to replace the US dollar, but to have it be a companion to what we would think of as the physical US dollar. So I think there's definitely going to take a lot of time. I mean, if we look ahead to the future, yes, are we going to digitize everything? All dollar equivalents will no longer be paper. We'll get there, right? But in the short term, it's going to be a companion product. I'm not sure, you know, what are the use cases going to be? How is it going to be managed? Is it going to be the large commercial banks that host it, or is the Fed actually going to want to have be the wallet host for every individual in the United States? We're suspect about that. So is it something that could force existing cryptocurrencies to the margins? The answer to that, I of course, coming from where I said, no, that can't happen. And why not? Because they're different use cases. Non-sovereign digital currencies, or digital assets, some of which operate as stores of value, some of which are programmable or have other use cases. They're so different, right? That it's because the thing is, the Fed can, how do I put it? The nation state needs to be able to monetize its debt. They need to be able to also, you know, run deficits, and therefore be able to move their currency outstanding total money supply at any given time for a variety of reasons, right? And so Bitcoin is a fixed supply. It has a very different use case. They overlap only to the extent that they're digital. Otherwise, and the ecosystem is so large. You have all these companies with, you know, billion-dollar market caps plus, you know, Coinbase could potentially IPO. You're not just going to erase that with a stroke of the pen. I think that would be extremely difficult and really far-edge use case. Nothing is impossible, but it's highly improbable.
Well, and I think this, you know, the second part of the concern and the thought behind there being an outright ban is, you know, what is the current regulation what sort of pros and cons are they weighing? And Matt, sitting from your seat, you know, what is the likelihood of some sort of crypto ban in the future, or even on the banking side, where's the regulation heading right now?
Yeah, that's a great question. And yeah, so I'm gonna paint with a few broad strokes first. I mean, I think at the federal level, first thing, we've seen the exact opposite in terms of the signaling. You know, like Josh already mentioned, the OCC There's already signals now that the FDIC is starting to engage in conversations. The recent signals that have come out of the SEC and the CFTC, I'm using a lot of acronyms here, but all of these federal agencies, quite frankly, the winds seem to be blowing in the exact opposite direction. We've gone from, a period of time, literally 4 years ago, where no one knew how to approach any of these regulatory concerns. No one knew how any of this fit. And in a pretty short amount of time, we've now seen a reception from all these regulatory agencies as to how they see it moving forward. So in terms of an outright ban, I'm making a bold statement here, but I really don't see that happening anytime soon, because I just think it's trending in the opposite direction. When you layer on top of that, then the opportunity that I think exists for competitiveness in the marketplace, and Josh Sroge touched on this a little bit, and I'm not by any means an expert in retail banking, so I can't speak to sort of the competitiveness at a retail level of how banks might interact with some of the central bank digital currencies. But again, I think one of sort of the fundamental tenets, and we literally just saw this, for those of you that don't know, there was a short, not really opinion paper that came out from the Kansas City Fed yesterday, just discussing some of these very topics about weighing the pros and cons of a central bank digital currency and what that might mean. But one of the big themes we're seeing is reaching the unbanked and reaching the unbankable. And again, reading the tea leaves a little bit, it seems that the movement right now is, wow, there's maybe a reaction from some federal and state regulators that some of these technologies really can be used to reach the unbanked populations and allow access to financial solutions that are not otherwise available. And so again, there's, from a policy perspective, and now I'm getting preachy, I realize, but from a policy perspective, this creates new opportunity for competition. This creates new opportunity for products and solutions, and it creates new opportunities for access to people that haven't had access before. And again, other countries are jumping on that bandwagon, and I think a lot of folks in the U.S. are realizing to go the opposite direction would potentially put us at a disadvantage.
And Josh Finkleman, I guess from your perspective as an asset manager, what's the reception on the institutional investor side, or insurance companies or big institutions on their reception of this space as compared to, strictly speaking, on the banking side?
Yeah, they're waking up to it in mass. The kind of the last big wave of adoption that we saw in this space was kind of 2017, kind of that rally cycle. And that was predominantly retail investors, right, all over the world, kind of, moving into this, at that time, kind of speculative new asset class. Well, now, since then, the whole ecosystem has started to really mature some, and a lot of the infrastructure has been built out, like custody, and banking relationships, to where institutions at this point feel more comfortable having some exposure to this, right? And so, if you will, the infrastructure has been built out enough so to justify that. And now we've got a really interesting catalyst of that in the background with COVID, right? So we have this global pandemic, and as a result of that, central banks are just printing vast sums of money in stimulus, right? Billions, in our case, trillions of dollars. Well, in a very stimulative environment like that, in a macro view, that debases the current value of fiat currencies, right? And we start to see the impact of inflation. Well, it's interesting because this environment, which has now become what could be contrived as inflationary or to be inflationary, is now driving institutional investors into this asset class, and namely into Bitcoin as a kind of a store of value, right? Kind of a more, a more rare digital commodity than gold. To give you a sense, Bitcoin goes to these halvenings. So every 4 years, the issuance rate is cut in half, the inflation rate is cut in half. And we just had a halvening, the third halvening in May. Well, with the fourth halvening, which will happen in 2024, late 24, late 25, Bitcoin is gonna be twice as scarce as gold. Think about that. So you have now a digitally scarce commodity that's twice as scarce as gold. So it is a very hardened, tremendous store of value. And I think institutional investors are starting to realize this. And so you're having these iconic investors like, Cathie Wood and Chamath Palihapitiya and, Raoul Pal and Paul Tudor Jones, stand up and say, hey, wait a second. We believe in this Bitcoin trade. Like we see this as fundamentally a better store of value than gold, right? Long term. And oh, by the way, you don't have to, have a massive safe to store your Bitcoin. You could store it on your cell phone, right? I could store $1 billion worth of Bitcoin on my cell phone and walk anywhere in the world with it, fly anywhere in the world with it, have sovereign wealth. You can't do that with gold. So it's a paradigm shift.
And Josh, we did get a question while you were mentioning the halvening. Can you explain what the halvening a little bit more? And
yeah. Sure. Yeah, so the halvening, programmatically how the Bitcoin software code is written is it's written to every 4 years become more scarce. So right now there are about 18.5 million Bitcoins that are circulating, right? And essentially they're slots on the Bitcoin network, right? It's a digital ledger. And so when you own some Bitcoin, you own some slots on that ledger. And there are a finite number of Bitcoins. And miners, which are groups around the world, and they have specialized computers, and they hash. They have so they're solving a problem, a mathematical problem, and it's an incentive for them to join the Bitcoin network. And so what they're doing is they're trying to solve a mathematical problem that is an algorithm structured to be solved about every 10 minutes. Whichever miner on that network solves that mathematical problem is rewarded with new Bitcoin, okay? Currently, they're rewarded with 6.25 new Bitcoin approximately every 10 minutes. Well, today, Bitcoin, the value of a Bitcoin is over 19,000, so that's a lot of money. And so what's really brilliant is that this code is structured to where every 4 years, that reward, that issuance rate is cut in half, okay? So 10 years ago, the reward was 50 Bitcoin. Now it's 6.25. So what happens is the inflation rate programmatically drops, cut in half every 4 years, and it makes Bitcoins more scarce. And eventually that reward will go to zero, right? In I think 2140. And there'll only be 21 million Bitcoins in existence. So it's hard capped. It's the opposite of central bank currencies. Central banks can print an unlimited amount of money, thus debasing their currency, right? The dollar has lost 95% of its value since the inception of the Federal Reserve in 1913. So that gives you a sense for what inflation can do. Well, Bitcoin is designed to be the opposite. It's set up to be anti-inflationary, right? It gets more and more scarce over time, and hence why its price keeps going up dramatically over a 12-year period.
So thanks, Josh. I think it was helpful to understand, how the scarcity works. Josh Sroge, maybe you can take this one. Someone asks, volatility has been the hallmark of crypto so far. How does it become, or can it become, a more stable asset class? I think it'll be interesting from the exchange side to hear your thoughts.
Yeah, because it still remains a highly volatile asset, right? Being in it, I have those cognitive bias where I'm like, wow, look how stable it's been for 2 days. It feels very stable at the moment, right? But historically, and as it compares to other assets, it's highly volatile, but the price discovery is ongoing. So what's happening is there's more entrance into this space. I think Josh Finkleman mentioned, the institutional investors are moving in, and I think Matt also alluded to that when he said in terms of more serious, larger money players that are either, is it are they coming in via banking? Are they coming in as investors? Are they in publicly traded funds? Giving access, say, the day that Fidelity says, yeah, everyone can access these, a much greater basket of digital currencies. These things will all contribute to the reduction in the volatility. But to get there, there is going to be volatility, but it's, we're all bullish. It's upward because the price discovery is not complete. If it's really digital gold, you're looking at 300,000 plus per Bitcoin to have an equivalent market cap in today's dollars per Bitcoin. So, will it continue to be volatile? Yes. Is this the process of price discovery as it matures? Yes, it is. So, being in this asset class, it's buckle up, but it's a fun ride.
Can I interject, Josh, real quick on something? So Bitcoin is so volatile because the entire asset class is still very small, right? The entire asset class market capitalization of this space is, call it about $565 billion. That's like the equivalent of like MasterCard's market cap, right? I mean, it's still, the whole space is still relatively small. And as such, I think Bitcoin's market cap is roughly 62% of that, like around $350 billion. And so in the global scheme of things, it still has a relatively small market cap. So when capital moves into that asset, you see a lot of volatility. Now, as Bitcoin grows, right, and say it starts to disrupt gold's market cap, right? Gold's market cap is around $9 trillion. Well, if Bitcoin eventually matured to be on par with that, right? Be on par with gold's market cap, each Bitcoin would be worth over $500,000 a Bitcoin. And you would see that volatility compress, right? And it would probably, the volatility would mirror something like gold, where it just wouldn't move in price that much. But, it's actually just, it's because it's in its infancy. This is a toddler at this point, this asset. But therein lies the opportunity, right? If you're willing to take some risk and have some exposure to this asset class that is that volatile, that is this nascent, and it becomes a global store of value and a global payment network, then there is, right, theoretically exponential upside for you. So there's an opportunity there for people. I'm not condoning going out and, foreclosing your house and dumping all in Bitcoin, right? I'm not giving you trading advice, but I'm just merely educating you to look into this and to realize that volatility is not necessarily a bad thing.
So another question here, how likely or when is it that Bitcoin or some other cryptocurrency will replace the USD as the world currency? And what effect does that have on the US economy as a superpower status? And that's
Matt, you take that one. I'm not touching that one.
Now we're getting into geopolitics. Wow. So yeah, again, this is just my belief and that's it. But I really personally don't think that Bitcoin is going to replace, the dollar anytime soon. As Josh and Josh have both explained already, there's a lot of attributes to Bitcoin to make it attractive as, a store of value, a reserve asset, more so than a transactional, replacement like the dollar. And so, and quite frankly, again, I think some of the signals that we're seeing in the marketplace support that. So I'm not one of the believers that thinks that, it's a matter of time until something like Bitcoin replaces the dollar. I'm sure there are those out there, but it just doesn't look like it's headed that way to me. So yeah, I think that's my response.
Great. And one more question here. So completely switching gears, besides Bitcoin, what other cryptocurrencies are, and again, open to all three of you, are you bullish on and why?
I can answer this. I've got 100 I'm bullish on. Let's just talk about kind of the number 2 ranked cryptocurrency by market cap size, Ethereum. And Ethereum is a smart contracts platform, and it's a protocol layer like Bitcoin. And what that means is you can build decentralized applications on top of it, right? And most of the initial coin offerings, the ICOs in 2017, were actually built on top of Ethereum. They created a standard, kind of ERC20 token standard, where if you were launching a new digital token, you could very easily launch it on top of the Ethereum network. And so the practical applications of that network are unbelievable, truly unbelievable. I mean, staggering. To have a smart contracts platform. And let me explain something. So today's internet, as we know it, okay, it's structured where you basically have a thin protocol layer, TCP/IP, and all these kind of mega apps are built on top of it, right? The Googles, the Facebooks, the Twitters of the world. And the value accrual is at the application level, right? You can't own a piece of that protocol layer, right, as an investor. Well, in tomorrow's blockchain world, you can. You have fat protocol layers like Ethereum, where you can own a piece of that protocol layer that thousands, if not tens or hundreds of thousands of applications are built on top of. Now, those applications are going to have value accrual, and you can own some of them and you can do well, but it's a paradigm shift in that now you can own the underlying protocol that they're built on top of. And that's incredible. And theoretically, the upshot to that investment, is super exponential and asymmetric. Now the question is, which of these smart contract protocol layers are going to become the dominant, protocol layers, right? That the globe uses, and that's tricky. And Ethereum has that lead right now, but we're really excited about that, just as an example of a different token out there that we're excited about.
And there was a specific question pertaining to Ripple and XRP, which has been bouncing around quite a bit lately. Any thoughts on Ripple?
Well, I can say it's bouncing around quite a bit, I believe, because of the Spark airdrop that's about to occur. So I think that there's some, then that's a whole nother topic. What are airdrops? How does that work? And I think Josh can probably chime in a little more on this, but I think that's underpinning some of the recent bullishness on the pricing on that one. I can't speak to the use case of that. I don't really follow XRP very closely.
I can just touch upon that. So Josh is right. XRP is designed as kind of a fast settlement, layer where you can send Ripple these tokens internationally, right, around the world, and they'll settle in 2-3 seconds for very cheap. But it's not a smart contract protocol layer, but this airdrop that they're doing now on their network is a kind of a smart contracts, new protocol layer, if you will, which is sparking some interest, because what they do is they take a snapshot of their Ripple blockchain. I think it's on December 12th, and then they're going to airdrop the equivalent amount of these new tokens. So, you can be opportunistic about that if you're an investor. And then Stellar is another, high-speed settlement network like Ripple. And typically Stellar moves is correlated to the price of Ripple. So when Ripple moves, Stellar moves. So it's funny, we're seeing both of them kind of take off in anticipation of this. So, that's kind of what we see.
Thanks. So it's 12:54. I have a question for all three of you. We're sitting here today. The total market cap is about 577 billion. At least it was an hour ago, if nothing drastic happened. And price of Bitcoin is somewhere around 19,300 per token. What do each of you see happening in the space in the next 12 months? It could be a big or small prediction on the exchanges side, investing policy, wherever you want to go with it. But where are we 12 months from now?
I've been going first, so I'll speak. The next 12 months are going to be one of the most exciting 12 months in the history of the space. There's going to be lots of consolidation, lots of entry from traditional players in this space. You'll see big movements on the financial markets. You'll see into this as well, investment in it, which because it's of shallow liquidity, as Josh alluded to earlier, on the exchanges will drive the price significantly. You also see more regulation, which helps provide the foundation for more price discovery, right? You think, oh, tax law will hurt it. No, it'll help because it'll provide the clarity that the big players need. As the big four move into this space in terms of tax and audit and some of the bigger investors. So I think that's I feel like I'm on one of those shows at the end, you get a prediction. I predict up and to the moon. But I want to say one little thing. I want to circle back way at the beginning about the CBDC paper from Kansas City, and that originally, in crypto, there was a lot of, it's going to help everyone be banked. And in the beginning, it was the bank became unbanked through it. People like me went all in, right? But now I think we're turning around and we're seeing that it's actually going to provide banking to the unbanked, that it's going to have an inclusive aspect to it, which really is heartening from a social mission perspective. And I hope to see that realized more in 2021.
I'll go next. Ola, thanks for the question. I think, sort of hearkening to what Josh Sroge just said, I think that we're going to see some real groundbreaking maneuvers from a regulatory perspective. The federal government, Congress really hasn't done much. There have been honestly a couple bills. There was, quite frankly, there was one bill that mirrored and was based upon one of Wyoming's early utility token exemption bills. It didn't get very far in Congress because there just hasn't been a large national conversation, but that is changing rapidly as Wall Street gets into this space. A quick plug for Wyoming. Wyoming's newly elected U.S. Senator is a huge crypto and Bitcoin advocate. Her name is Cynthia Lummis. She'll be a centerpiece, I think, in the U.S. Senate for pushing regulatory clarity. And I'm not really that concerned about negative regulation. As Josh just said, a lot of the big institutional players just need clarity on whatever the case may be. And so I think as we see that more, Josh Finkleman talked earlier about some of the smart contract platforms and the rollouts there. I think as users become more comfortable with the accessibility and the speed and the efficiency of using these platforms for transactional purposes, I think we're going to see an explosion there as well. So likewise, I'm really bullish for a lot of reasons, but particularly because of the policy and regulatory changes that we're seeing.
Yeah, and I agree with Josh and Matt. I mean, I think we're really on the cusp of what I believe is kind of the next wave of global adoption, right? We're seeing massive kind of global technology companies like Square and PayPal roll out crypto. Now the card brands, Visa, MasterCard, are onboarding this. You're seeing central banks innovate and work on central bank digital currency. China is slated to launch their central bank digital currency at some point next year. Facebook's Libra token is rumored to launch, early next year. So I really think we're at that kind of tipping point, if you will. And next year, I think we could very well see the floodgates open. So it's an exciting time to be in this space. And, I think next year is gonna be really an exciting time. So.
Thanks. Yeah, I hope all of your bullish projections come true next year. So thanks for sharing your thoughts. Thank you to each of our panelists, Josh Finkleman, Josh Sroge, Matt Kaufman, and to each of you for joining today. If we didn't get a chance to answer your question or you want to ask it in private, you see everybody's contact info up here. You can also look us up at bxecapital.com. Thank you so much. Stay in touch, and we hope you enjoyed the conversation. Take care, everyone.
Thanks.
Bye.